Alright guys, let's break down a couple of recent trades. Now starting with this 15-second chart here, we have a clear range between the 380 and 500 levels, with obviously the 440 level marking the range's equilibrium point. Now after hitting fresh lows down here, the market, as you can see, reverses, consolidates, and then forms a stop hunt zone. We then break structure above, as you can see, the 410 level here, making a 90-point move to the upside as the market pushes into overbought territory. Now it's clear we had a decent setup here, and clearly the case could have been made for a long entry. However, I held off because this stop hunting zone down here didn't really convince me. Why? Well, because the move, as you can see, isn't as clean as I'd prefer, in the sense that this drop doesn't seem to line up with the usual algo-driven stop hunts we actually see near downtrend lows, where you have the price cleanly cut through key support levels. For example, this, in my opinion, would have been a clearer price cut through support, unlike this one. Ideally, I'd like to see a cleaner pattern formation without, again, this kind of noise, if you will, which is why I chose to wait rather than jump in prematurely. Trading, I think, is fundamentally, as everybody knows, is fundamentally about smart risk-taking. Now, once this large imbalance zone up here gets breached, the price flips and turns bearish. The reason I placed my long above the 403 level here is because I thought the market might retrace and quickly retest the flip zone down here before actually continuing to rise. At first, it seemed like my strategy was spot on with the first contract, proving my analysis was solid. With the second contract, though, I got stopped out, which means the market did retest the zone, but it did not sustain actually the upward trajectory like I had originally thought. I kept thinking that a retest of the 403 support level would open the door to new highs and signal a continuation of the prior advance, which is why I targeted, as you can see, the 511 level. Obviously, I was wrong. Alright, with this trade done, let's move on to the next one. Now we are looking at a 2-minute time frame here for a long scalp. Honestly, I should say that this was a bit of a grind, a counter-trend trade on the hourly time frame that ended up being more of a pain in the ass than I actually anticipated. As you can see on the chart, we've got a large-scale range expansion taking place, which gets capped by this noticeable barcoding action highlighted by a sequence of rejection weeks. Now these weeks are key in my view because they signal the market's inability to break higher. This rejection leads to a series of lower highs forming at this level, which in my view clearly mark the top of this 2-minute trading range. I mean, it's a classic sign of market makers stepping in, setting the stage for a potential reversal. I'm mentioning this because we have already seen the accumulation phase down here, followed by the markup phase, and now we are entering the distribution phase. At this stage, all that's left in this textbook Wyckoff pattern is to wait for the markdown phase to begin and then identify an entry point. And now, following this bearish order block at the 484 level here, we see a drop of about 30 points materialize. However, the subsequent rebalancing move of the left curve of the action here did not offer, in my view, a viable entry point. Instead, the formation of this next order block, as you can see, does create an imbalance area, which in turn prompts my short entry into the market. As I mentioned at the beginning of this analysis, this trade was a pain in the ass. I came close to being stopped out not once, but twice, but fortunately I wasn't. On top of that, my first target was hit twice without my order being filled. The whole thing took longer than I'd hoped, which in hindsight though is somewhat typical for a counter trend trade. All in all, it was a grinding experience, but I shouldn't complain because at the end of the day, this ended up being a green trade. And here guys, just as a quick note, if you want to see further examples of price action trading similar to those we have analyzed, be sure to check out the next video. Alright gang, thanks for watching, and as always, hope to catch you all in the next one.